Hi there, welcome to kneppyinvests. Hope you're doing well and you enjoyed your weekend. I'm recording this on Sunday morning at about 11:45. My weekend actually started on Sunday morning at about 7 a.m. In this video, what I'm going to do is talk about how changes to a company's uncertainty or risk profile can lead to huge changes in that company's share price. And I will give you three examples today. In two of the examples, we have seen the share price drop by about 20%. For one company, that was in one trading day, and for another company, that was over about 3 or 4 trading days. And then we'll talk about, at the end of the video, another company which saw the share price rise 31% in one day, simply because there was a change, a positive change, to the uncertainty of that company. So let's get stuck into it. And the first company we'll be talking about today is Appen. Appen share price fell 19% in the one trading day, the final trading day of the week. And it wasn't really helped by the fact that the overall market was down by about 1.7% because of fears that Omicron is going to cause destruction and mayhem throughout the world. In my opinion, the market totally has overreacted. And so this could be a buying opportunity for those who want to buy the dip. But why did Appen's share price fall 19%? So let's have a look at that whole story. As we look at Appen's chart since the start of this year, a well-defined downtrend, there are or have been talk of some structural challenges for Appen as some of their largest customers. So this Appen is renowned for having some very big customers. And when a company does have a few very large customers, that can cause some problems. And that was one of the biggest negatives about this company. And we have seen the share price be under threat since about, I think it was August of last year, when the share price was something like $48. The share price has fallen all the way down to just above $8, and that low was reached in October of this year. But it did look like the share price was turning around over the past month and a half. In fact, you could say, just by looking at this chart, there was a possible new uptrend trying to develop. So the market was finding some good value when it came to Appen in recent times. But with the share price down 19% on the last day of trading, that downtrend was definitely broken, and there was some fairly high volume with that share price decreasing as well. But what caused that massive decrease in share price for Appen? Because when you look at the news flow from the company itself, nothing was released. So there had to be some outside factors that controlled the share price of Appen on the Friday. And all you have to do is really do a Google search, Appen, why did it drop? And you'll get a lot of hits. So let's have a look at some of the hits I did find when I Googled why did Appen share price fall 19%. The first hit was from Financial Review, the Australian Financial Review, AFR, just talking about Appen was the biggest laggard, cratering 18.8% to $9.45 following a broker downgrade, which is interesting enough, but that's all they had. Which broker was it? So I found another site here, Rask Media. Lachlan Bird Jensen mentioned it was a downgrade from Macquarie Bank, who downgraded Appen price target from $11.80 to $9.50. So it's all clear now why the share price of Appen fell by 19%. It was just a broker downgrade, and to me, I do find that a little baffling. Why do I find the share price falling 20% because of a broker downgrade baffling? Simply because it means that a lot of people, I won't say can't think for themselves, but will just look at this downgrade or upgrade from a broker, from an analyst, and just simply believe what they tell them and make their decisions based off that decision from a broker. So the first question I had is, why was there a downgrade from Macquarie Bank? I did have to do a little bit of searching, but I did find that one of the reasons they downgraded was because Appen clients, they think, will bypass Appen and directly crowdsource for data annotation services. Now, this has always been a risk for Appen, and it's been talked about over the past 9 months, and that's one of the reasons why I think the share price was dropping, and potentially Macquarie Bank just confirmed these fears. So the question is this a short-term issue or is it structural? And there's the reason why you have to work that out or try to figure that out is because there's a massive difference between the two. A short-term issue means it leads to opportunities to buy this company or any other company at really good value compared to if it's a structural problem. This could be something that affects the company for the rest of its life. And I think when you look at some of the presentations that Appen does release, they do talk about their new markets category. So they have their core business and they are expanding into new markets, for instance, China, enterprise, and government. And when you look at one of their most recent presentations, they did mention that the new markets category revenue for the first half was 47.8 million, up 31.5%. They also gained 74 new customers, which means they have 320 active customers in this new markets category. So it seems like Appen's management know about this problem, having these few large clients, and they're trying to change that, and they are doing stuff to rectify this problem. So at this point in time, I'm not absolutely certain it's a short-term issue. It could be sort of a medium-term issue, but I don't think it is a structural problem for Appen moving forward because management have seen this problem and are rectifying it. But the main thing this has done, this downgrade from Macquarie, it just simply increased the uncertainty or the risk in this company. And investors, majority investors I'll say, hate uncertainty. They don't like the fact that the share price could be anywhere from $2 to $40 because, to be honest with you, fear is a much more powerful emotion than greed. And fear can control our decision making to a larger degree than greed. And that's why when companies or brokers release any sort of bad news about a company, you will see a share price fall by a significant amount. And in fact, it might fall by way more than it should. And that does lead to some opportunities we can take of buying into companies at some good value. So that's what I'm thinking right now with Appen. I'm not saying this is an opportunity to buy this company right now, but I do think there are some questions we have to ask Appen. But if we see this new markets category continue to expand and grow, this issue of having a few large clients won't be an issue much longer. On to Babcore, who saw their share price drop 18% over 4 trading days, and on the first day, the share price dropped 9%. And as soon as I saw the share price drop 9%, it did pique my interest because I have been following this company since they IPO'd on the ASX 2014. I'm a big fan of the company. I wouldn't say a massive fan. I'd say a big fan because they have grown quite considerably since they listed 2014. I think the market cap has increased tenfold, and we're seeing big rises in the revenue, operating cash flow, and all those sort of things. And one of the reasons why this company has grown considerably over the past decade or 7 years since they listed on the ASX is because of the CEO. And I am a big fan of the CEO. And since I am talking about the CEO right now, it should be no surprise if you don't know already. The reason why Babcore's share price dropped 18% was because the CEO of Babcore did resign during the week. There were expectations that Daryl Abotomy was going to be in the CEO role for a few more years, but he announced that he will be retiring on the 28th of February 2022. So this is not an immediate resignation, but I think he is getting old. Well, I shouldn't say old. He's 63 or 64. I just think he's been in this role for 10 years, and I think he just wants to retire. He just wants to enjoy life from here on in because being a CEO of a company is probably really taxing on anyone's life. And I think he just wants to enjoy life from now on in. So I don't think this is anything to do with Babcore, the company. I just think he just wants to retire. But it has had a significant effect on the share price. And you can see here with the chart of Babcore, up until this resignation, share price has been trading in a channel for about a year, or just over 1 year. And that channel ranges from about $6.80 to $8.50. And right now, at the end of trading on Friday, the 26th of November, the share price is right at the bottom of this channel, which could make this a good trading stock over the next few days, particularly if this support level at $6.75 holds firm. Some good upside, maybe a 25% upside if the share price rallies to the top of this channel. But the resignation of the CEO has raised some questions about the future of Babcore. So what are my thoughts about why the share price has decreased and whether it is justified? Well, let's talk about that now. In my opinion, it's not really baffling why the share price of Babcore fell or has fallen 18% since Darryl Abotomy decided to resign, because I do think if he's not a great CEO, he's definitely very close to being called that, particularly a great CEO for this company. And because he could be considered a great CEO for Babcore, the question becomes, who's going to be the new CEO, and will the new CEO be anywhere near as good as Darryl Abotomy? And that does increase the uncertainty and risk moving forward for Babcore. No doubt there would have been some sellers who just saw that Darryl Abotomy had resigned and immediately sold out, because one of the reasons they probably were holding was because of the CEO. The questions are, did he depart for any nefarious reasons? Does he think this company is heading backwards or anything like that? I think probably not true. I think there's probably some simple reasons why he's resigning. And more than likely, he's resigning just because he wants to enjoy life from now on. And I hope that's why he's resigning. But this is leading up to some opportunities, because if you think that the next CEO will be maybe not as good as Darryl Abotomy, but he might be, or she might be, in the same ballpark, then this share price decreasing 20% has led to an opportunity to buy Babcore at much better value. And just looking at the chart in the previous slide, it does look like you could trade this company if it does bounce off the support level at about $6, and what was it, 45 cents or something like that. Now on to EML Payments, which saw their share price rise 31% in 1 day because of a change in uncertainty. And the share price of EML has been quite volatile over the past 6 months. In fact, about 6 months ago, we saw share price of EML Payments drop 45% in 1 day because of a change in the uncertainty of the company, a change in the risk profile of the company. So let's go back in the past and just look at why the share price of EML Payments dropped 45%, I think it was in May this year, and then another 14% in October, before we start talking about why the share price rose 31% in 1 day. A few years ago, EML Payments acquired an Irish company called PCSIL, which is PFS Card Services Ireland. And then in May, the Central Bank of Ireland mentioned that they were concerned about PCSIL's anti-money laundering, counter-terrorism financing, risk and control frameworks and governance. So they were concerned about some of these issues, and as soon as the market saw some of these issues that the CBI was raising, share price dropped 45% in the 1 day. Again, there was an increase in uncertainty for EML Payments moving forward, increase in the risk profile of that company, even though EML Payments did say this won't be affecting the rest of the business, because PCSIL only accounted for something like 25% of the overall EML Payments. But the market and investors don't like uncertainty, particularly when it relates to anti-money laundering and counter-terrorism financing. So we saw the share price drop. It did recover for a little bit, but on the 8th of October, the share price fell another 15%, because even though the PCSIL board were making some governance improvements, the CBI did advise that the PCSIL's proposed material growth policy as requested and approved by the PCSIL board is higher than what the CBI would want to see. And EML Payments actually mentioned that this would have a material effect on EML Payments, and that's why the share price fell 15% on that day. Up until the 25th of November 2021, we had seen increased uncertainty and a higher risk profile for EML Payments because of what was happening with their PCSIL subsidiary in Ireland and CBI. They're trying to work their way through it, but signs weren't looking all that great based off that 8th of October announcement. But on the 25th of November 2021, there was another announcement in regards to Central Bank of Ireland and their issue with PCSIL. And this announcement was very bullish for EML Payments because it mentioned that the CBI will permit PCSIL to sign new customers and launch new programs while staying within the material growth restrictions, and broad-based reductions and limit controls on programs will not be imposed. And the CBI intends a material growth limitation over PCSIL's total payment volumes will be imposed for 12 months or rescinded earlier following third-party verification to confirm PCSIL's remediation plan has been effectively implemented. This was a much more bullish announcement by EML Payments. So it does look like the PCSIL is working through the issues and CBI is liking what they're seeing in what they're doing. And that's why the share price rose 31% in the one day, or because that uncertainty that the market had been seeing was alleviated. Less uncertainty and the risk profile of the company had decreased. And as we have a look at EML Payments daily chart since April of this year, we see when they released that May announcement, share price fell 40% in the one day, recovered nicely. In fact, the share price rallied from about $2.60 to $4.20 before the release of that October announcement. And the share price after the October announcement just kept on falling. So I think the market, unlike what we saw in May, was convinced that this problem wasn't going to go away, and that's why the share price went all the way down to $2.70 before the release of this latest update. And the share price has rallied quite valiantly over the last 2 trading days, up 31% on the day they released this announcement, and then up another 0.5% on the Friday when the overall market was down 1.7%. In fact, the share price had reached a high on that day of $3.90. But if you compare where the share price is now to where it was before the May announcement, we saw the share price at that point over $5. There's a lot of catch-up this company has to make. So I think there is still some opportunity in EML Payments right now. EML Payments rally, share price rally, on the back of this latest announcement in regards to CBI and PCSIL is not baffling to me. I understand why share price has increased 31% in the one day, simply because the market now knows where PCSIL stands with CBI. Before, there was a lot of uncertainty about where they stood. This could be a significant have a significant impact on EML Payments. And now I think the market is understanding that that impact won't be as severe as it could be under the worst case scenario. So a good way to look at this is the worst case scenario before this announcement is no longer in play, which means the overall risk profile of EML Payments has improved. So uncertainties decreased, the risk profile has improved, and that's why share price has rallied by quite a bit. But with the share price just under $4, I still think there is still room for the share price to grow from here, because overall, EML Payments is a growing company, and it's going to continue to grow over the next 5 to 10 years, in my opinion. So there's still opportunity to take advantage of this increase in uncertainty that we saw in May and then again in October, and then this decrease in uncertainty. Now, I don't think the share price should get back up to where the share price was back in or before the May announcement, because I still think there's a little bit of increased uncertainty or risk. So I still think a share price of around $4, $4.50 is a good share price for EML Payments right now. That's all I have for this video on how changes to uncertainty or risk can lead to significant or huge changes in the share price of a company. We saw how a broker downgrade led to the share price of Appen falling 19% in one day. We saw how a CEO resigning led to the share price of Babcore dropping 19% over 4 trading days. And we saw how increase in certainty or decrease in uncertainty led to the share price of EML Payments increasing 31% in one day. If you have any questions about this video or any of my thoughts that I have portrayed, or you need some clarification or anything, please leave a comment in the comment section of this video. Otherwise, I am not a financial advisor, and if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.